Hi, this is Kyle Boston, Vice President, First Coast Financial Group. This is your market watch for the week of September 28th, 2020. Our topic today is Fed policy. And for those of you with money sitting in bank savings accounts or CDs wondering why your yield is so low and whether or not that's likely to continue, hopefully this can help provide some answers for you. The Fed recently changed its policy approach to a flexible average inflation targeting policy. Inflation has persistently been below 2% and has only exceeded that level 3 times in the last 20 years. The Fed now wants inflation higher than 2% to balance out the time that is spent below that number. The common calculation for GDP is consumption plus investment plus government expenditures plus exports minus imports. However, from a quantity theory of money perspective, pioneered by Irving Fisher, you can multiply the money stock with the velocity of money to get GDP. So the two important components are how much money and how quickly that money changes hands. Now there are a few different measures of the money stock, M1, M2, and MZM. MZM is the broadest definition of what money is available for economic transitions and is the right one to use when used with velocity and its impact on inflation. MZM has exploded higher recently with the monetary stimulus efforts. However, that is not what's important for inflation in the economy. You need an increase in money changing hands, and just the opposite has happened with MZM velocity dropping. The Fed's desire to raise inflation and thus raise the level of GDP will not happen unless the velocity of money increases. The Fed put out its dot plot letting everyone know that interest rates are going to remain ultra low for years, setting the expectation that cash sitting in banks is likely to lose purchasing power at an ever-increasing rate. It's a complex way of saying that for the foreseeable future, interest rates are going to remain low. And coupled with the fact that the Fed's initiative to raise inflation is going to greatly increase the risk of savings account money and CD money losing its purchasing power over time. There are strategies that offer a comparable level of safety while offering much higher potential returns than these accounts. Now, if you're interested in learning more about what we talked about today, or if you want to learn more about our company, feel free to give us a call at 904-288-0103. Or you can visit our website, www.firstcoastfinancialgroup.com, and you can book an appointment directly on there. This is Kyle Boston, and this has been your Market Watch for the week of September 28th, 2020.